guest says the downgrade from S&P was not surprising. It does put Argentina in a difficult situation. Jonathan Sheridan joins us live now from FIIG Securities. Of course, we saw earlier this week QBE blame its fifth profit downgrade on its business out of Latin America, in particular out of Argentina. Look, what do you make of this move to Argentina?
Good afternoon, James. Yes, it's a very interesting development in the way that their bond payments are being handled at the moment. They have actually deposited the funds for those interest payments into their custodian bank in America to make those payments, but the court has ordered that bank not to forward the funds on to the bondholders due to this legal challenge. So it's a technical point, but obviously one that's got major significance.
Surprising?
I wouldn't say it's surprising. I mean, obviously, since 2001, when Argentina defaulted the last time, there's been an inherent risk in investing in Argentinian sovereign debt. So I think the thing here is that they're just trying to normalise the situation, the Argentinians, that is, but they have these so-called vulture funds which own their unrestructured debt, so the original bonds that were defaulted on, and they're expecting repayment in full. So I don't think it will help, let's say. I mean, Argentina will have trouble accessing the global capital markets, but I think that's a situation they've been in for the last 13 years in any case.
So you don't see this sort of having a marked impact in regards accessing global funds as opposed to what they're already experiencing? Is that right?
No, I don't think so. I mean, they have the funds available to pay the required interest. It's not about the fact that they don't have the money. It's a technical default rather than an inability to pay. I suspect there'll be some kind of agreement hashed out in the next few days, and their default will effectively be rescinded. I mean, if I was one of those funds and I bought the bonds at 10 cents in the dollar and they're offering me 50 cents in the dollar, then I'd probably take that. So in the absence of getting nothing, if they do default and then there's a further restructuring. So I think, like everything's a negotiation.
Is there also an illustration of, I suppose, market power over sort of the political will?
Absolutely, and that's exactly what you're seeing. The market, being these hedge funds, have gone and got a legal judgment in their favour, and notwithstanding the wishes of the Argentine government, that's what's being held. So I think in all cases the market will out eventually. The global markets are much more powerful than really the whims of policymakers, and you see that in terms of, let's just put it into perspective. The Fed and their tapering was supposed to have yields rise, and yields have actually fallen in 2014. So that's what the market's saying about the view of the economy, notwithstanding what the Fed wants them to think.
Look, I suppose one of the other big focuses for the market, of course, was the FOMC. What did you make of this?
I think in terms of the decision, it was just business as usual, consistency from the Fed, which is good. I think the interesting piece for me was their change of language around inflation, and that's always been the worry for me in terms of the easy monetary policy that we've had for several years now, is that inevitably that will lead to inflation. We've been recommending for some time that our investors have inflation protection in their portfolios, and whilst it's been benign over the last 2 or 3 years in America, we're really seeing, I think, the start of that pickup. And to be honest, when you've got a $3.5 to $4 trillion balance sheet, inflation is the way that you'll get out of that huge amount of debt.
Did we see much reaction in Treasuries?
We did see a bit of a reaction in Treasuries, but more related to the surprisingly big GDP number. It wasn't related to the FOMC. The GDP number obviously came out about 33% or so better than expected, and Treasuries sold off on that news. 10-year yields were up about 10 points. So that was a big move for Treasuries. Yeah.
All right, Jonathan, good as always to talk. Thanks a lot.
Thanks, James.